The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Matt Justice here for Tackle Trading and the market recap video for Monday, April 4th, 2016. It's a pleasure to be with you guys here on this Monday, like it is every Monday, bringing it to you the way we see it over there at www.tackletrading.com. Get in the game one trade at a time. In looking at today's market, we really didn't see a lot of price action movement. The market down just a hair off the highs from today. Volume was really kind of just in that average range, a lot better than we did last time we had the market update from last week. But we're still kind of starting to see a little bit of a slowing momentum in the chart. We were seeing it again last week. We popped back up a little bit. It's kind of in a fade mode, when it really doesn't know where to go here. You're not seeing any strong selling. You're not seeing any strong buying outside of any major economic problem. I mean, the Fed hasn't given anybody a reason to sell. And, even when the Fed comes out and gives a speech, Janet Yellen gives another speech where she says basically the most dovish comments of all time. And because of that, there's not a reason to sell in the marketplace. And, this fade up, fade up, fade up, bad news doesn't stop it. Good news really kind of just fades it. And that's kind of what we're looking at here. And I got a couple questions from a couple of my students, and they were basically saying, well, Matt, how far can this actually go? I mean, if you take it from the very, very low point all the way down here at about 1800, you're currently at about 2050 in the market, which is about a 11.5% run. Actually about a 12.5% run. So we're up about 12% off the lows, the very, very lows of February, once you were seeing all the volatility coming into the marketplace. And so that's a big concern. How many times have we seen a 12% rally without seeing some type of pullback in the very short term? So we're going to switch this to more of a weekly chart here, and let's kind of compare it from the lows. You got a 12% movement here. That's a 250-point movement over the course of the last really 2 months in the market. You had a very similar rally right here, maybe not necessarily over the exact same time frame, but you're still looking at about an 18 from the very lows of this movement here, 1830 up until 2090. So you got a very similar price movement on this one, almost identical before it came back down to the lows that it had just recently, a couple months ago. Back here in October last year, if you'll remember, you had a significant move to the downside as well back then, and it went from 1850 up to about 2092, which was about identical to this price movement here, and then you had a retracement back down, and that's really what kind of started the neutral market. The neutral market that we've been seeing over the course of the last really year and a half or so. And so we have seen historical examples in the last couple of years of the price moving quite dramatically. And even if you want to go back, a little bit more time frame than that, let's just kind of look at some of the upward movements from out of the bear market. And this is not going to be the exact same, but you have a huge price movement to the upside coming out of 09, where it went up about the same type of points before it retraced back down. But you're also talking about a 30% movement in the market. Then here it comes back up, and you see another really significant run before it retraces back down. And if you look at percentage, that goes from 1860 all the way up to, or 860 all the way up to 1100, like 1120. Which is a 20% price movement. You have a really big one in quantitative easing 2 right here as it drives up to the highs of 2011 before it drives back down. Then you have another one here. So as you can see, they actually occur quite frequently when you're dealing with raging bull markets. But the biggest difference is, when we're looking at back here when they started quantitative easing 1, or back here when they started quantitative easing 2, or even right here when they started the dollar swap and Operation Twist, or right here when they started quantitative easing infinity, those were a lot of money coming into the market, versus right now, and looking at just the last 3, the current run up here at about 12%, all 3 of these runs right here, here, and here, October of 2014, October of 2015, and then obviously March and now April coming into 2016, we're all about a 12% movement before we started seeing some downward movements in price. I am seeing a little bit of weakness with the futures market right now showing downward movement in price. Are we going to see something that retraces in this capacity or something that retraces in that capacity? In my estimation, we'll see something more along the lines into this. But with this marketplace, you really can't determine one way or the other with absolute certainty where it's going to go. But I don't expect some horrific volatility to the downside anytime in the future. Not until we start to see more Fed discussion coming into later April, or maybe even the next economic activity might be something like the Great Britain leaving the eurozone, which I would be surprised if that actually played out like that. So I do foresee this kind of fading. The thing that would really shock me right now in this current run, maybe not in the future, because you never know what happens in the future regarding the central bank, but in this current run, if we go up and break outside of resistance. And one of the things that I like to look at constantly is the upside potential greater than the downside risk if you're a long-term investor. And if the upside potential is limited and the downward risk is great in any capacity, then you may want to look into writing call options against those investments. You may want to look into the protected put option. Tyler Craig did an absolute wonderful job. If we'll pull up Tackle Trading just this past weekend on the newsletter, where basically he talked about adding in portfolio insurance, how to add it, what it looks like on the risk graphs, in terms of looking at the different ways to manage the trade, sell the puts back to the market, roll it down, roll to a vertical spread, some more advanced techniques as well for you advanced traders. But when I'm looking at the marketplace, I see some downward potential more than I see, downside risk more than I see upside potential. And at that point, especially with the VIX being where it is, the VIX underneath 15, that might be a good opportunity to add insurance to the downside. The last couple times we dipped underneath 15, we saw a huge increase to the upside in terms of volatility. So it's going to be interesting to see what happens here. I might look at adding insurance to those long-term portfolios, given where the VIX is. The cost of options relatively cheap right now in comparison to if you wait until the house is actually burning down. That's an option that you may want to go with just for the short term, even though I do not see a tremendous amount of risk out there. It's just insurance right now is very, very cheap with the VIX being underneath 15 right now. Moving on to some of the other markets out there, let's look at the dollar index. Last week we said the dollar was going to go down, and lo and behold, the dollar went down. Now you're kind of coming into that resistance, and right here, it's make or break time for the dollar. Are we going to continue moving to the downside at this support level at 94.5? Are we going to see an upward movement in price? If we see an upward movement in price, that's back to being neutral. I foresee some money coming out of the dollar, and just in the last little bit. I mean, we're down about 4% total in the last month and a half or so on the dollar. You are starting to see a little bit of weakness in this downward movement in price, unlike we saw on this pivot or this pivot. Even right here, we're seeing a little bit of different price action here. It's really having a hard time breaking that support level at 94.5. Keep an eye at 94.5 on the dollar. If that does break down, look for crude to drive back up. And as you can see right here, you're seeing this nice little retracement coming down on crude. You got the dollar at a support level right now. And if you'll draw those Fibonacci's, which everybody knows, I love my Fibonacci retracement numbers. If you draw those Fibonacci's right now, you're right between a 38 and a 50% retracement on crude itself. You're at support level on the dollar. Look for the dollar to break. If the dollar breaks, crude could get a nice little pop back up. That is something I am looking at over the next couple days or so. One day, one doji, one nothing. That's nothing. We got to see some dedicated confirmation with an upward movement in price on crude itself. Let's look at silver. Silver has a neutral bias. Let's look at gold/GC. Gold right here, since really kind of this retracement here, you got a 23% retracement on gold. I would love it to come down into that 1200 range. You're right into this range of the old resistance level, new support over here. I'm not a huge fan of 23% retracements. Some other technicians love them. I am not a fan. I love those 38 to 50% retracements and then scaling in at 38, 50, and potentially 61%. Before you call off the dogs if it ever breaks that 61% level. On the euro dollar, we had a buy last week as it broke up. This is now sitting at resistance. The only concern I have with the dollar index is the euro. Can the euro sustain some type of break of this level of resistance with some news coming out of Greece? I'm not 100% sure whether or not it can do that or not. I still like the short on the dollar if it breaks 94.5 though, because the dollar index has more currencies in it than just the euro out there as well. A couple things in the news very quickly. How about those Panama papers? Panama coming out with, we had this a leak from a very, very reputable firm out there talking about 11.5 million files that are going to be leaked, 2 billion in transactions that we know about already. This news that came out late last night. This is just starting. It's going to be a long drawn out type scenario. What I'm interested in is who on Wall Street, who in corporate America, and what politicians. Those are the answers that I want to see over the course of the next month, 2, 3 months, as we dig deeper into these Panama papers. But what a fascinating! This makes WikiLeaks look like a walk on the beach in comparison. We're talking some of the major headlines already. Vladimir Putin's a part of it, and that's just to get clicks. But outside of that, it's going to be interesting to see where that goes into. Next on the agenda with the market recap, we are entering into another earnings season. Earnings season officially starts off next week with Alcoa coming out next week reporting earnings. But Walgreens, Monsanto, CarMax, Conagra Foods, they all report earnings this week. Next week, you have about 18 companies, large cap companies and above, reporting earnings. These are some of your big dogs like Alcoa, Bank of America, BlackRock, Citigroup, Delta, Fastenal. JP Morgan is reporting earnings as well. There's Charles Schwab Corporation, SanDisk, Wells Fargo. Those are all reporting earnings next week. For earnings, ladies and gentlemen, the simple question you got to ask is the historical data, does it justify bringing on some degree of insurance? We've talked about that in past market recap videos. We've talked about it over there at Tackle Trading. So definitely go to the search bar, search that in over there at Tackle Trading. So earnings is coming up. A lot of different ways to handle earnings. Number one is always protection on long-term investments. Number two is volatility. Understanding volatility rises, understanding volatility crushes, and seeing how you can take advantage as a buyer of volatility or as a seller of volatility as well. A couple things just on some individual stocks out there. Alaska Airlines made a leap that not everybody thought that they could meet when they when they acquired Virgin American Airlines at I believe somewhere around a $2.6 billion acquisition. Obviously, the market was not ready for it, and it gapped down on explosive volume. Institutions don't sell on one day just to buy on the next, ladies and gentlemen. You're an investor in Alaska. This is a little concerning for me with the acquisition and how the market obviously responded to a negative on Alaska. Disney, everybody loves their Disney except the Disney COO. Oh, nope, excuse me, the Disney Disney COO, the Chief Operating Officer, is moving on to greener pastures. Disney downward moving in price at resistance of 100. If you're an investor in Disney, if this can't get above 100, look out below, especially if you're looking at those on the weekly chart. M formation, slightward upward movement in price on the first retracement. That is a kiss of death formation on the weekly chart. If it does not get above $100, adding insurance to long-term investments on Disney is absolutely one thing that I would would consider strongly. And then last but certainly not least, my friend and yours, Tesla Motors. Tesla breaks out of resistance one day on news of their Model S that did absolutely amazing things with when they rolled out over the weekend and last Friday. Well over 200,000, last I count, about 250,000 pre-orders, all putting down $1,000 a piece, represents about $9.5 billion in future sales for Tesla. We'll see if they can deliver on those, but that was obviously positive news coming into last Friday. As you can see, the market did break out of resistance right here. However, today Tesla had a total of 14,820 vehicles which sold in the first quarter, which comes up short of the forecast of 16,000. So they were slightly underneath that by right around 1,180 vehicles, and they reaffirmed their full-year outlook of at least 80,000 automobiles sold. But with the decrease that they had in the first quarter, I see that being a little ambitious there. Still, Tesla doing some great things. Nothing on this trend has changed so far, except in the short term. Would be willing to give up a little bit of the run that we've seen from 141 all the way up to $250. If it retraces, no big deal for those long-term investors. I still love Tesla, and we'll see what they do in the future. If you enjoyed the video, hit that like button, ladies and gentlemen. Love the like. Hit the like button and tell a friend about Tackle Trading, and go out there, check out that Trading Justice podcast. We did the first ever book club edition of the podcast today with my co-host Tim Justice and new team member Garrett Holden. So check that out. Let us know what you think of the podcast with the new book club coming out once a month. This is Matt Justice. This is Tackle Trading. Get in the game, one trade at a time.
The Bulls versus the Bears. Get in the game. www.tackletrading.com